we're talking at the time when TCS is going to come out with numbers, yes, or this week is punctuated with IT biggies.
That's right.
There, the margins question is, or margin point is coming out firmly because the input costs, if you will probably normalize a bit. But there are question marks around valuation, multiple pullbacks happening, as Credit Suisse pointed out. How are you thinking about this space?
So I think you put it very well. I think there are plenty of tailwinds. The foreign currency is one. The input costs and turnover on the employee side is the other. But the headwind is clearly on revenue growth, right? The kind of ease of revenue growth that we saw over the last 2 years is going to probably again, going to come off a little bit, given how the US seems to be announcing job cuts across companies. So that kind of pressure will be visible in IT services revenues as well. That's what I think. But I think that the tailwinds from cost management and the tailwinds from the weaker rupee versus the dollar, that I think might help the industry out. So I'm actually not so negative on IT services earnings from here. You might see revenue growth slow down into single digits, mid-single digits, but earnings growth will probably bump around just a double-digit mark for the industry is what I'm thinking at this point. So how do you square these two factors with valuations, which are still one standard deviation above a long-term historical range? Because IT services stocks did phenomenally well in 2020 and 2021. 22 was a massive sell-off year for them, but I think valuations are still above median. My sense is stocks go nowhere, and over the next 6 months, valuations come back a little bit more because earnings growth catches up. But my sense is that I'm probably being too finicky. And post the December quarter, once the expectations are reset, once the commentaries are through, there may actually be an opportune time to start loading up on IT services again from a medium-term perspective. Mind you, it's not going to give you the kind of spectacular returns that you saw over the last 3 years, but will it give you 13-14% annualized return, in stock price plus dividends? The answer is yes, and that's not a bad return. Remember, we are in a world where returns are going to be harder to find.